Okay, welcome, good morning. We're okay. This is beautiful. So, welcome to the people that are gonna watch this video. You're watching it now or you're watching it later. I'm okay with that. The content here will be especially to show people that there is a different way to trade and there is a different way to live your life. You can make money online, and no, you don't need to pay expensive courses or be in chat groups. You don't have to pay monthly subscriptions to a TikTok guru, his Discord or Telegram chat to receive signals, and yeah, you'll probably make some money there or lose. But the idea is you have to learn to do this for yourself. And what I noticed the last years, and especially in the beginning when I started trading, they overcomplicate things. They make it look so difficult that the most people don't even get through the first year. And we as traders, we see the 99% literally as liquidity. And don't take that wrong. Take that as something to learn from and be the 1% or be the 0.0001%, because you can learn how to trade the traditional way, like many of these guys make their money. But if I see their setups and how they enter, how long they stay in trades, for me it doesn't make sense. I started my first business in 2008 with the idea of being financially free to do whatever I want. And that's what I did. I'm not here to be sitting all days in front of a screen. I do that because I love that. I don't need to. That's why I'm telling you, stop paying for courses, stop paying for signals. I don't need your money. I already make more than enough, and I'm doing this because I really see people succeed. And okay, enough of this. Let's first dive in to the chart. And yeah, we only trade GBP USD because the simple reason, one pair, one setup, and that's all you need. Really, it's don't overcomplicate it. Don't look into staying 3, 4, 5 days or even weeks in positions. We're gonna be in, out. We take our money, we call it a day, and then we're gonna sit on a terrace. I live in South Spain, so it's gonna be good around noon. I'll probably be having lunch somewhere. And that's what life should be about enjoying yourself and doing what you love to do. What makes you passionate? For me, it's trading. Really, I love trading, the excitement, even just watching every pip movement, every tick on the chart, reading that in real time, and interacting with the market. It just turns me on. And yeah, you hear I'm still cold, but I'm here anyway for you guys. So okay, now let's start with a technical analysis. You can see my trading view chart. my the square with where I'm in is over the trading view logo, but most people that are already in trading know this is trading view. And this is my first live, so I'm gonna make a few small adjustments here so that everybody knows this is legally, I have to do this legal, otherwise I could get problems. So we're not gonna extend it, we're gonna make it like this, and we're gonna put there text. This is not financial advice, guys. Financial advice. Let's make this white a little bigger, and let's put this in the center. Okay, perfect. Now we're legally clear. This is, you see it, not financial advice. This is what I do. I'm not saying you guys should do the same. I'm just telling you, watch and learn, pick up what works for you, and start doing things different than what the rest is doing, because problem with most setups is smart money knows where the orders are. And I mean, with smart money, I mean really the institutions, they know where people are trading, and they use, of course, logical, it's their job, they use that as liquidity. Now you see, I don't use indicators except for the big daily candle. I really like it because it keeps me grounded. Where the market is gonna go, and in my analysis I always gonna check out continuously what is the market doing and how is the daily candle gonna form during the day. So let's first dive into the weekly. Okay, GBP USD. I advise everybody strongly get a journal and do it manually. Don't get an online journal, just buy a cheap book to write in. Why? Writing with your hand, because it has an emotional and practical effect on the brain. You're gonna write down your emotions, and writing down what you feel and think is gonna stick better in your brain when you do it on the old way than when you're typing it in on your computer. And it's also easier because you can make quick notes. And Skull, by the way, a nice coffee in the morning. No sugar, think on your health. And okay, let's get back to the journal. So write down what you feel, what you see in the market, how the market is reacting. And I always say your trading career starts the day you start journaling. because you can be, and it happened to me the first year I was just taking positions. I really didn't know what I was doing. I was stubborn. I wrote nothing really down concretely, and yeah, it really changed when I started writing down what I was doing and why. And you see a pattern forming inside your trading, and you see always a loss. You write down loss, because in the beginning, if you're really doing this alone like I did, you're writing down loss, 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 but you're also writing down why, what happened, and you see stop loss. What happened to me most was stop loss hit and reverse, market reverse. So I was breaking my head over that, and I was thinking like, how can it be that the market takes my stop and reverses? And it happened so many times that I started to see a pattern in the market. And for me, that was enough to study that deeper. And yeah, I advise everybody go check ICT, Inner Circle Trader. He has the best YouTube content ever, but it's a lot of hours. It's like really you're gonna be. I got through the whole course there. It's in total like 600 videos. It took me more than a year, every weekend, every day, watching videos, studying, taking notes. And I started following content of ICT in 2020. So that's but if you really want to learn it quickly, then I advise you to follow people like me who explain things very simple and very concrete. If you want to go deeper and really become a pro, you should start studying different types of technical analysis, like the traditional patterns, trend lines, support resistance, especially also smart money concepts, supply and demand, and ICT is definitely maybe even a Wyckoff. There's some great content available, but like for me, it took me years to get to where I am today. And what happened in the end is I made my own setup. I built my setup around my psychology, and that happened in the process because during the years I saw that where I was failing and most wasn't my technical analysis, it was in psychology. And that's why I'm telling on TikTok also, I'm telling the people like the problem isn't the market, the problem isn't your analysis, the problem is the 99% your mind doesn't work yet like a real investor, like a business owner. You need a mindset shift. And that only happens over time when you get more professional. So come, let's now dive into the charts. I'm journaling, you see, I'm still journaling. I have several, and I mean like a pile of books here. I'm writing down everything, and I invite you to join me there. So first of all, we're gonna write down the pair, the date, 6/1/25, Monday, so we can come back later to this. And I was here at 8:30. So consistency in the market is key. And now we're gonna do the first check. And yeah, I got multiple screens open here so I can see multiple time frames. So what do I have open? I have the hourly chart open. I have the 4 hours open. I have the 15 minutes open, all GBP USD. And then we have trading view, the screen that you guys are watching here. We're gonna use that now to do a top-down analysis, but first of all I want to dive into this, and I want to see for my log, because I'm working on an Asian setup, and I've been working on that like for more than more than a half year, 7-8 months now. So we're gonna write down, I'm gonna write down, this is an accumulation zone of 27 pips, slightly up, bullish. So now next is of course London, and let's check something very important here. First of all, let's go to funding pips here. Monday, let's check Monday if there is news. We just had German prelim CPI at 8:30, but that doesn't affect the GBP USD so much. It brings slightly a little bit of volume, but that's okay. We have final services PMI, but it's medium impact, and that's later in the afternoon today, so we're writing down no news. And now we can dive in. Where do I have the trading view? I can. Okay, perfect. So now we can go to the weekly chart, and let's see from a distance what is happening there. If you see this, okay, take that away, my mouse blocked a little bit. You see this is on a higher time frame. You see this looks like accumulation. You see this is an accumulation zone, and from here too this is pretty straight, but it's a weekly chart, so price goes from 145 to 115, and here we see a manipulation. For people that studied ICT, you all know what I mean. It took out all the sell side in 2022, and this is the first video live, so I'm just taking you over some steps. I don't do this every day, of course, but you see we are slowly going up now, and I think in the long term we're gonna go after these highs here, because it's relative equal highs, and that's gonna attract the market like a magnet. There's a lot of people here above that want to sell, So smart money wants to go there. There's more people that want to sell at higher prices that were buying here very cheap. So it's long-term investors. They don't mind keeping their money in for 5 years or even longer. They see it as long-term investments. You know, if you get from here to here, let's see how much percent that is. Look. That would give them almost 40% gains on their money. So it means you put in 1,000,000, you take out 1.4. If you do that in, let's say you invested here in 2022, and you can take your money out in 2026, 2027, 40% in 5 years as debt in your bank. So it's smart to invest long term, buy cheap, hold long term, and sell when it's again high and find another asset to buy cheap. We're gonna be talking on that too later, but the first thing that we have to do is get money in all of our pockets, in yours, in mine too, because I like money and money loves me. So what do we see here? We see that the market is going higher high, higher low, higher high, higher low, lower high, a higher low, a higher high again, and now we're at relative equal lows. And I just told you the market is gonna be attracted as a magnet to get below. So if we're gonna zoom in now instead of zoom out, let's take that flip away to have a little more clearer view. Now you see the market is dropping down since Monday 23 September. We are in a downtrend and we had a market structure shift here. Okay, let's take that away and block it. So okay, then we just do it like this, no problem. So we had a market structure shift here, a change of character, and you see the market was dumping pretty awesome. I was going short like most of the time, and I cashed a decent amount of money in the whole move at the end of last year. So was pretty fun to ride that wave down, knowing that we were gonna go after this low and this low, because they're relatively equally low. So I knew we would drop below here. That was almost a certainty. And when we hit back up, then we had to be a little more careful, but I was still trading here. And that's the beauty of my setup. We don't really need a bias, but the bias gives us the difference in scalping and getting our position, getting into the market, taking our pips out and walking away, and leaving a running position open. But I'll explain that all. Don't worry too much about it now. And let me say quickly hi here in the chat to nobody for the moment, but we're gonna build a channel, so that's the whole reason that we're gonna be streaming here every day until a few people, and afterwards also, but I mean, we're gonna be streaming here so people can start making money online without paying expensive coaching programs and chats. Look, we had a market structure shift here too. You see market breaks, takes out the liquidity in this sell side imbalance, buy side inefficiency, or BCICT terminology. Thank you, Michael Huddleston. If I do something wrong or I say something that you don't agree me, don't sue me. Just send me a message and we'll figure it out how to solve it. Just kidding, by the way. Yeah, you see market price reprices into the fair value gap, but we see all this liquidity being unmitigated. So the market is gonna wanna go after that liquidity one day. Maybe not today, but in the future, there's more people that want to sell. And we see we have daily fair value gaps. So on the weekly, you see it's really an accumulation zone. We are trading inside the range from 134 or 35 to here at 120. And if you want to be trading, if you want to be swing trading, then it's relatively boring. You know, you're gonna be looking on the 4-hour chart. You're gonna enter the market here in December, and maybe get out here at the end of December. With what? Let's calculate this. Look, with 370 pips, but because you get in a high time frame market, you also have a way bigger stop loss. So your stop is gonna be about 100 pips. So if you're trading funded or personal capital, then you're risking like a big amount of money. So what happens is swing traders, yeah, they make more pips, but they're long in the market. They have how do I explain this in English? I'm not English, by the way, from nature, so from birth. They are subjected to the market for a long time. You know, like in days you see from here to have a risk reward of 1 to 3, there would be what? Look, till here. That's in total from this point where they get tapped in on Friday the 6th of December till Thursday the 19th December. And if the market would go against them, then yeah, they have to wait on the confirmation of this liquidity to decide if they're getting out. But you're already taking, look, 50 pips. If you do that with 100k funded account, 50 pips and bye-bye account. So your stop has to be way tighter. If you're wrong, you're out with 26 pips. And sorry, you're losing 20 pips. that's about 1/4, 1/5 of the threshold you have in your account. And then you have to be there in the position for a few days. Depends of what type of funded account you have. If you go in profit and you go in drawdown, then even on open P&L, it can be that they close your account for getting into negative profits. So that's why I don't advise anybody of swing trading or day trading. There's way more simpler ways to get money out of the market. And let's check out what's happening now on the daily, because I jumped to so look. Now you see, we already said on the weekly that we were seeing a downtrend, lower low, lower high, lower low, clear market structure shifts on higher time frame, and we have clear break of structures too. So you see, this is the low, made a new high, sets a new low. When it breaks below this structure, when the market breaks here below, then that's a break of structure. So what do we expect now? Okay, let me get this away again. Let's look what the market is doing, and we can see that we are currently, let me take that away too, we are currently filling this fair value gap here, and make that into another color. Let me do this like this. I'm still learning how to trade live and stream and speak meanwhile, so give me a little bit of slack, guys. You see, now we have a breaker here, and it coincides with the fair value gap or sell side imbalance, buy side inefficiency that we have here on the daily. So I expect for today that we're gonna see this gap getting filled. So I'm writing down week 1 we were bearish, we're trading in a downtrend, and I write that down every day, because you see, we are trading down on the higher time frame. We are definitely trading in that trend, so I write that down every day. And on the daily I write down D1, also bearish, and I write down now, but in bullish move, filling fair bearish fair value gap, expected point of interest, POY, point of interest, is gonna be the bottom for me of this breaker. So what do? We're gonna put a colored line under here in a color that we are not using for something. Let's find something a little more visual, and we already have purple lines here. So you see, we have the formation here of a bullish pattern, probably gonna see it filled today or maybe tomorrow, but this is the point where I want price see trade against. And we can see the fair value gap on the 4-hour chart is the complete candle here, and this was the order block. So now if we would take a fib and we would check from the bottom till the last swing high, then we see that we are mitigating the fair value gap, but we can also see that there is an imbalance inside the order block with possible fair value gaps on a lower time frame. So that's what we're gonna check out, and we can already see here, this is our golden box in the latest swing high low. So I'm gonna put that in orange, and let's put this like that. I'm gonna take this away so it's a little clearer, and you can see now this is the Fibonacci golden pocket, as it's called. It's the 61%. So that's for me a point of interest, but because of the current market structure and where I believe there's a lot of stops, we have to be careful and cautious of not entering too soon. Now let's write down for H4 clear bullish movement, and draw on liquidity is gonna be the golden zone, and the CB sell side imbalance, the buy side inefficiency. But I'm interested to see what is happening here above in this zone, because I think that we're gonna see a strong push in this area, and then we're gonna probably see a retrace. I don't know if it's gonna happen today, the retrace, so let's just see what we can do, if there are trades today or not. Let's take this away for a second. And you see on my chart, I have the, you see the dotted line here. I'll move it so you can see. This is Friday's low, and this is Friday's high. The pink box here is the Asia range, and we are taking the highs and we are creating what this is: sell side liquidity. There's people with long positions and stop losses below here, so the market definitely still has a point or an interest in coming back down now. And you see this fair value gap is already gone, and we had a smaller one on a lower time frame, but H1 is definitely bullish for the moment. That can change every second, of course. This is trading, and let's watch into what happens here. So you see we are making a higher high with a strong push up, and it's going after, let's move the golden zone a bit. We only put it there so we know it later and we don't need the whole fib tool on our chart. you see, this is a golden box that I drew last week, and yeah, there's probably gonna come a reaction here, but we have to see that on a lower time frame. So bullish price action is the journal, is what we write down in the journal. We see also what this candle is doing. It has been pushing up, and now we have to think, where is it gonna go and what is it gonna do later. So this is what price is doing now. Probably see this happen, push up a little more and come back down. So then we know how the candle is gonna look. We're gonna have a higher wick. Where is that wick gonna go? We don't know. And where is the candle gonna close? We don't know. So trading is reacting on what the market is providing on information. We're not here reading the future. We're just gonna make an analysis, see if it or confines or whatever it's called, or that there's enough confluences with our A+ setups. And if we see an opportunity to get in, take a scalp and make some money, we definitely gonna be present. Now we can drop even down. Look, we have the golden box, a reaction in a lower time frame fair value gap connected to a lower time frame order block. So yeah, we could see a bearish reaction here, push up later during the day, and I mean, like, we could see something like this happen. It's all possible. These are, by the way, patterns that keep repeating. I'm not inventing this. Those are smart money patterns. So you have a higher high, higher low, higher high, higher low, higher high, lower low with the change of character, and then probably this should be here. So you guys start seeing how the market reverses and goes back after liquidity. But this is predictions. We only draw that on the chart to form an idea of what is possible. And now we're gonna look into this 15-minute fair value gap here. What can we see happen here? So on the 15-minute, for my analysis, I write down 15-minute clearly bullish, but if we are looking into the time frames, we see we get in Europe market open till London lunch. So technically the market for us is opening now. London is starting to wake up. Europe is already trading for about an hour. You see the liquidity coming into the market. That's Europe starting to trade. You know, like Germany, Brussels, the Europe economies, except for the Brexit for UK. So London, we are at UTC +1, UTC 0 is London, and they actually only start at 10 for us here. It's 9 a.m. there, that's office hours. So we'll see more liquidity coming to the market a bit later. So the real kill zone that I'm gonna be looking in for a scalp is between Europe market open and London lunch. So most brokers and institutes, they stop really the high trading volume stops around 11:30, 12:15. That's not a good idea anymore for me to get into the market, and I base that on collected data. My best setups are from 11 to 12 inside here, and I'll start looking at 10:30 is gonna be the hour where I'll be more interested in taking a setup, because what we're seeing now is a lot of liquidity being constructed here. And let's change this. This is a bullish fair value gap. We're gonna extend that to the right, and we're gonna take the background away. So it's a 5-minute gap. You see there's no beautiful or perfect market, or there's no efficient market. There's still orders waiting here, so we want to see what happens here. We have lower time frame gap there, and we have a gap here. The red square is the new week opening gap. Let me write it down. Let's write that in white. New week opening gap. Definitely something to keep in mind. Price will always be attracted to go back there, and let's put that here in the left. Maybe change that to another color that we see it better. Let's see what fits best here. Make it cursive. Make it like this. You see new week opening gap. And now you can also see we have a fair value gap in the new week opening gap. So we have definitely an interest, or as the draw on liquidity, look, we have a lot of equal lows here, and there's liquidity below Fridays. So I'm not gonna say 100%, but I'm pretty sure that we're gonna see some more opportunities to the downside to get into shorts. Maybe not today, maybe not tomorrow. It's gonna depend on what the market presents us, how we're gonna react. But we can see, I'm gonna make this yellow. This is a bearish higher time frame fair value gap, and we're getting a nice reaction, but this is way too soon and not enough information to get in. Yeah, we could have sold here and took profit here, but you don't know if price is gonna go up or down. There is no clear proof. We don't have enough confluences. So just wait and be patient. Patience is one of the biggest keywords you have to learn in trading. It was a big issue for me in the beginning, because I was taking 7-8 trades in a session, and I was blowing a lot of accounts. So, or at least a decent amount of accounts that I blew before I had my aha moment. So, what do we see here now? That we still see some bullish moves. It's still Europe. We're still seeing nice manipulation. Let's check on the 1 minute. You see we're still on higher high, higher low, higher high. And now we wait here because I want to first see what London is doing. So I'm gonna mute you guys for a second, and I'll be back in a few minutes. Gonna take a coffee break, have a shake and stuff like that, and then let's get back into this. Okay. Okay, microphone. Still figuring this all out.
Now in this reading, I'm hearing like specific for this week, luck is on your side. So this is a week to make big moves. This is a week to be bold. This is a week to really go after what it is you want, whatever that might be.
Sweet, some TikTok video telling me that I'm gonna have a good week.
Some of you have love coming
Always
in. Some of you have
like
new
that,
love coming
you know,
into your life, and some of you are
psychic
entering
tarot
as a
readers,
some of you have
just
new love coming in, and as a
inspirational and
result,
motivational.
you're moving up in a different way in life because you're going to have this divine counterpart who's going to be helping you.
Probably they're right, because I'm doing great actually
this
in
could be love.
life.
This could also just be a soul connection where something is coming together here, where the two of you are going to be elevating something in a big way. For another part of this collective, though,
see what I
this
said.
is a result of
We
you
are still inside
loving yourself,
this
and you are getting this like
value
happily
gap.
ever after,
I
happily ever
expect
after
now a
ending within
consolidation
yourself because
here.
you've worked through all of the things that you needed to clear. I do feel like for a lot of you though, you have a big soul connection coming in. So again, this could be romantic, this could be love, it could also be a business partner, it could be a collaborator, it could be a friend, it could be so many different things. But let's see. Yeah, you don't see this coming. Whatever this is that's coming for you, you don't see it. But life is about to speed up in a really big way for you, and you can't see it coming. I think that's also why some of you like woke up this morning and you're on another timeline, and some of you aren't going to feel that new timeline for a couple of days because the energy is still settling. So everyone's in like a little bit of a different place. It also depends on how much you had to clear over the last couple of weeks and months. Yeah, you're coming out of hermit phase. You are coming out of hermit phase. You do not see what's about to happen, but you're coming out of the hermit phase and you are moving into an incredible...
Okay, let's quickly make another TikTok video, because I really want to encourage people to come trade with me and really start making money without having to pay for it. You should all be financially free, and I learned from my spiritual journey that giving creates receiving, and giving without the intent to get or receive based on what people are paying you. No, the energies don't work like that. I strongly believe that the universe is gonna give me even more for teaching people for free how to make more money. And that is beautiful, because it has to be an equal interaction. So join me when I make a TikTok video, and let's do this. So let's put this in front of the chart. Hello, welcome everybody in this TikTok. You see we are live on YouTube waiting on a setup. I invite you all to come trade with us for free, and I'll explain you how I see the market. I do live tape reading, and you'll see me like almost predicting where the market is gonna go or should go, and what times are best to get in and out of the market. Take a few hundred, maybe a few $1,000, depends on your account type, or if you're just starting, a few $20, $30, $50 can be really life-changing. So follow me for more, and see you on YouTube, link in bio. Hello, welcome everybody in this TikTok. You see we are live on YouTube waiting on a setup. I invite you all to come trade with us for free, and I'll hello, welcome everybody in this. So you see I'm all natural. I don't make scripts. I just took my phone, I said what I believe is true, I speak from the heart. I speak out of my soul, and I really mean that I want to see you all succeed in life. And not only financially, but especially mentally, family-wise, and it all has to do with psychology, what happens in your head. And I studied that for a very long time because I knew it were my own work points. And now for the people that are still following, we see we're taking out this high a little early and even unexpected. So let's see what the 5 minutes is doing here. Are we gonna go higher, or are we gonna start to retrace? Because what's most important here is the time. London is about to open in 1 minute, and are they gonna give us a fake move and continue up, or are we gonna see a real break, and are we gonna see a bearish move to the Asian lows and even maybe to the Friday low, or a trade inside of the new week opening gap? We have to wait on the 5 minute close for my setup. We have to see the 5 minute close on this fair value gap. That's gonna tell us a lot, because you see this is a 5 minute fair value gap that we have here. So let's check this out. This is the 5 minute fair value gap 2 here. Let's give that a nice white color so we clearly see the difference. The yellow one is the 15 minute fair value gap, so we want to see the close here. How are we? The candle is closed and we have a close above the 15 minute fair value gap. So let's wait, because this is also the formation of an order block. Let's take some more noise of the chart, and we are still in the 61%, so let's see what happens here in the golden zone. But I think we might see a little more upside before we come down. You see, we tapped into the 5 minute fair value gap, and we have a new bullish fair value gap here. Let me, because I have my tablet here too with the 15 minute chart, so I can check continuously what's happening. Now you see London opens, and probably we're gonna see a little manipulation. We have, ooh, nice, a 1 minute order block forming or not. Depends on if there comes a fair value gap. If we have a break below this 1 minute structure and we break this fair value gap, this bullish fair value gap, then we could potentially see already a move to the downside, but I think we're going after this high. This is gonna be a fake move, and then probably a retrace. That's what I'm looking for now. This is my initial thought of what is gonna happen. You see already we are creating a lot of liquidity below these points, and we have the New York midnight. There's a lot of liquidity built up already. So what are we looking for in the setup. We're gonna see if we can find maybe a 10, a 15, maybe a 20 pip move. That's all we need to make tons of money. That's my point of view. Other people probably believe they should hunt 50, 100 pips. I don't give a you know what I mean. I get into the market, take the pips out and call it a day, or maybe a session, and check out what the next session is giving. So, but for now it's 3 minutes after 10 here. That's 9 a.m. 3 minutes after 9 in London. So let's relax. You see, on the 1 minute we already see a nice bullish reaction again. Let's take this fair value gap away. It's too much noise. We tapped into this one. Let's leave it a little bit to see what's happening. Oh, look what a nice push up. Like I said, first minutes we give a little manipulation, like no, we're going down, and now we're going up again, and let's see what the market does. So relax, and that's why I'm telling people this is more a psychological game. This is psychological warfare of a market algorithm made to make people lose money, and there's institutions, smart money, that is manipulating the market, and we don't want to be victors, we want to be victors. So we want to win, so we trade in line with smart money if we can. On the higher time frames we are clearly bullish for the session, but on the highest time frames the market is bearish. So if we can trade in line with the market, we could even see a nice setup where we get quickly our profits, and we have a runner that we put in break even or in profit too, and then we just pray to God that he pays us a nice amount, and that's it. Let me quickly finish this TikTok, and then I'm 100% with you. On YouTube, and I'm gonna put this in yellow, like here, like this. Let's put something else there, some more text. Let's make this bigger. Okay. See, the market is still fighting inside that fair value gap, and I like it. We start to see rejection wicks here. Can you see what I mean? This is being rejected, and we have an imbalance here. If we're gonna fall through, then we can probably find the ICT unicorn setup. We'll see a down movement, a backward, a move back up and to the downside. That's what we're looking for now. Let's make this red. Okay, sweet. Next. Some hashtags. Enjoy life is a nice hashtag. I love that. Live life to the fullest is a nice one too. Passion is one of my favorite hashtags. Motivational quotes. Mindset coach. Business coach. I help people set up businesses. Explain you how to build your business structure. And let's put some trading psychology and some more Forex. Forex trading. Forex trader. And let's put this hashtag to technical analysis. And this one I like too. Look, we're breaking above the 5-minute fair value gap. Maybe we even see a tap into this breaker. The pink line that we put on the screen earlier is the bottom of the breaker, so I'm really interested in seeing what happens. You see, we're not predicting, we're patiently waiting on what the market is presenting us. We're not pushing any buttons, we're just live tape reading, saying and analyzing in the moment what the market is doing. I told you this was gonna get mitigated, so I'm pretty accurate in what I see happen. We have a 1 minute close above a 5-minute fair value gap, so we have to go on the 5-minute chart and see how this candle reacts, how this candle closes on this fair value gap. But we already had a close. Let's go to the 1 minute to that 5-minute fair value gap, and let's see if we drew it perfect. Yes, it's pretty perfect. You see, between the high of this candle, the high of this candle and the low of this candle, of this order block, bearish order block, this is the fair value gap. There was a small fair value gap on the 1 minute here too. Let's make that clear. We can erase it. Now let's get back to what we're looking at here. You see, we have 5-minute close above these fair value gaps, so I'm still bullish until the market proves me otherwise. And we're not pushing any buttons. There's no trade setup for me. This is not my A+++++. And no, we're not taking B setups, no C setups, not even B plus setup. Forget about all that. Find a setup that really works, something that you see repeating in the market like every day or a lot of times, that gives you the confidence to push the button with a high lottage, like what the other traders say, oh, over leveraged. Yeah, that's what I do. I'm not gonna get into the market to make 30 bucks in 2 weeks or make 100 bucks in a half day. I'm not interested in that. I'm interested in getting in, getting out, and be done. Let's see, because I'm still here. Look, you see a nice reaction. Didn't respect the fair value gaps. So now we patiently wait. Just relax. No stress at all. Have everything prepared. Have my brokers open on another screen. So I only have to push the button, buy or sell, and I'm in. And that's a nice reaction, by the way. You see the volume start to change, but I'm not convinced, and it's not inside the kill zone, so we wait. No problem. I see an A, B. I'm still thinking on, I want to see the C. Let's see if SMC, and we plays another video. Okay. So I'm gonna put this aside and oh, like that. Gonna stand up for a bit. The sound you're hearing now is me drinking a milkshake. You know you can't smoke in front of the screen, so it's a little bit logic. We don't want to teach people bad habits, but we sell cigarettes or cigarettes are sold in every gas station, in the bookstores, in cigarette stores, but we can't smoke in front of the screen. Little hypocrisy there, but we deal with it. We're not gonna complain. But you see what I said? You see, this is pure manipulation. You see this week coming, and you know how many people are already in this trade? Let's see it from another perspective. You know how many, and that's what I learned. I studied a lot of ICT, like I told you. How many people got into this position they put a limit order in the fair value gap, and the TP is gonna be the Asia range low. This is what many day traders, intraday traders would take as a setup, and where they put their stop loss depends on them. Most wouldn't even risk a stop loss so big. So let's calculate. Look, this is a 15 pip stop. It's not my thing. Can be a good trade. I'm not saying this is a losing trade or it's a bad way to trade. Everybody's got his own ways and we have to appreciate and respect that. But it's definitely not what I'm looking for, because it creates, this is how the market generates liquidity and smart money acts on that. Now there's already people going short, putting their stop here, and that's gonna be the fuel to push even higher if we go above. Because if the market goes above, then the orders get executed as a market buy. So the sell orders here, the stops are actually buy stops. So in a traditional technical analysis, people are drawing trend lines and there's more stops now. People see the trend and everybody is buying, and there's now stop losses here, here. There's so much liquidity waiting to be taken, and we're gonna wait until we are on the right side of the market. So this is not our setup. Let's see what we can do on the 3 minutes. Let me quickly open this one and that one. You don't see it because I can't show you live trading. That's against the law, so I only show you the chart and what I'm doing, but you will hear the sounds when I push the button. It will say plop plop. You'll hear the clicking. Now I got the hourly candle and the 4-hour candle here open on my other charts, and this is a beautiful, that's a beautiful H1 fair value gap, and the 4-hour is also pretty bullish. We're pushing above the 4-hour bearish fair value gap into the order block, and I got a position, I got a line positioned here on, let's go see here, 125,163. Where is that? That would be in this area somewhere. There is the 4-hour order block. Let's quickly take this chart. Put that there, this there. Yeah, there is definitely, this is definitely gonna be more interesting zone to see being tapped. even here, this should be taken out. I'm gonna take those lines from my screen, they're from last week. They're useless now. So my point of interest is gonna be the 125 to 12. This is where we're gonna put this line to 12, the 200, and you see then we are in another golden box. So there's a lot of buy side liquidity for now. Our draw on liquidity is definitely bullish, and I'm not willing to take the risk on a Monday morning to just jump into the market, pray to be right. Now we have the 225. Let me get this. Let me put this here. We want to see the 25 mark is definitely the 125 mark is definitely already a mental position. It's where the market wants to go. That's an institutional number, 125. There's gonna be a lot of people that or institutions that have more bags to sell or that even want to start buying again. We have to wait and see what is presented. And you see what a nice bullish candle formed on the daily time frame. You see, not financial advice. I keep repeating that you push the button is up to you. I'm not responsible for your behaviors. I take responsibility over my own actions and my own decisions, and that's more than enough. Let's quickly get this chart, because I'm interested also, and there's not a lot of happening. Yeah, we have the chart here. This is where we're filming or recording. So this is the XRP USDT chart that I'm looking. I love XRP. It's a great financial asset, a great instrument for the banks. Love it. So let's see what's happening there. You see we had a bullish push up again, respecting the ascending triangle or the bull flag as it's called. But people already expect it to break out and go in price discovery, while we have to take in account that day 20, let me make this bigger. Day 20 is Trump's ascension to the USA throne, and or is it the other way around? Day 20 should be the end of the court case or Trump's ascension. Oh, remove this a little bit, no problem. So you see the timing and the market structure go a bit hand in hand. I think we could see in XRP, we could see this move. Let me put that here. And from here it can go up or down. I don't do predictions, I told you, but just being clear on what can happen, but I see a lot of liquidity waiting here to be taken. So I wouldn't be surprised if we get a manipulation event coming back to the to even the 150. I even have technical analysis made this weekend where there's a possibility to see XRP drop again to 120 and even below the dollar, but not financial advice, of course. Let's get back to GBP USD and let's see what the market is doing here. Ooh, look how beautiful. We're respecting the fair value gap, made a wake up. Let's see where we're going now. At the hour time frame and the 15-minute. I'm still waiting. Let me move this line on the tablet. Okay, we have to put another line there. It's just be patient and let's clean up this chart a bit. That's a fair value gap that's gone. You see, now we're coming inside the kill zone and we know what we're waiting for. Let's see, on the 3 minutes. Ooh, nice. We have a higher low. This could be a potential scalp, but let's take this. Look how it drops. Beautiful. But we have to see, this is gonna be a reaction zone. Why? Let me quickly show this. If we put the fib from this low, then you have the 50% of the fib. Here is where we come in discount again. We have this fair value gap is in the golden box on a lower time frame, so that could be a potential beautiful target, but let's not do nothing too hasty. Let's put this there. I always make that green and dashed, and then we can take this away, or we just make this fair value gap orange, so we know it's a fair value gap in the golden box. This was a potential sell signal for me, but because we had the closes above the fair value gap, I prefer waiting. Because you see it's already wicking. I think we might see a retrace. It's too soon. It's not gambling that we're doing here. Yeah, it is gambling, but it should be decisions based on knowledge not on a hinge. I follow my intuition too in trading. I'm not saying it's bad. I'm only saying we're playing with funds, and look how beautiful the 5 minute is forming. Let's see. There's no 1 minute fair value gaps beside this small candle, and that's not really a fair value gap, so nah. And we have liquidity here, probably gonna see an accumulation. Like I said, that could happen here, but market decided to start doing this. What is it gonna do here? Who knows? Let's just wait and see. If we miss a setup, then it's not missing, then it wasn't our setup to take. And because I urge you all and I advise you all to work on FOMO, or at least read the book of Mark Douglas, The Disciplined Trader. The 4 major fears are the fear of missing out, or known as FOMO, the fear of being wrong, the fear of leaving money on the table, and the fear of losing. And in this case, we're not FOMOing into a B position because we want to feel instant gratification on adrenaline of being in a position. No, we want certain confluences to tell us like, yup, this is the move we're gonna take. And like I said, Monday morning is always a little be careful on Monday mornings. I lost a lot of money on Monday mornings. It was weekend, you know, like most people hate working. If you're a business owner or self-employed or an investor, the weekends are actually boring. And I always look forward to Monday, start trading again, start selling again. The economy rises again. For people like me, there's opportunity during the week time. So I don't have an employee mindset. I don't have a 9 to 5 mindset. I even worked all weekend on content for YouTube and for TikTok. I worked on new business plans. I worked on my mindset. You know, there's always more to be done, and if business is your passion and you have clear goals of where you want to go, then you'll start to love Mondays. And that's the danger in trading. Your psychology is saying like, you didn't trade for 2 days. Oh, I want to trade. And yesterday evening I already had it like, oh, I'm so happy it's gonna be Forex is gonna open again. And I was looking the charts yesterday evening, and I've been there a lot in the past, you know, like Sunday evening, market open, Asia range, start pushing the buttons. In the beginning, especially when I was still trading, like all the pairs, I was putting buy and sell limits on many different pairs, and then you're all night watching the charts, and that is counterproductive. We want the session, we have our kill zones, we have our setups, we are reading price action. If there is nothing, There is nothing, we're not pushing buttons for the rush. So gonna take a 2-minute toilet break, speak in a few minutes, and I'm gonna mute you guys for a second here. Let me get here again. Okay, do this, then put this up front. Unknown. Money is the root of all good. Change your mindset. Get beyond the indoctrination of the system and of the people telling you that money is bad. Otherwise, it's hard to attract money. I like money and money likes me. Money loves my frequency. Money is attracted by my energy. Money comes to me frequently. Money is abundantly available for me. Those are the things that your mind has to be thinking. Okay, back to trading. So we're seeing here, and I can put my other charts back on, because the more info, the better decisions. But you don't need, I got in total 4 screens here open now. I could even open more, but it's pretty enough. Now we start to see on the 15 minutes we got a nice bearish reaction. So look, I'm gonna show you the 15-minute candle. Look, this is a beautiful bearish reaction. But I've seen that happen so many times before. We are trading into the order block in a fair value gap, and this would have not been a bad sell, because look, we would have already been 16 pips, 20 pips into profit, but it's too soon to take major risks. Let's get down to the 5. You see we have a new bearish fair value gap here. Let's make that yellow. But we are still reacting on this 5-minute bullish fair value gap. And we have no market structure shift. You could say we have a 3-minute market structure shift. But you see, it looks more like a consolidation. So, and these aren't strong highs. This isn't the type of order block that I'm looking for. I would even say, let's see what happens. Let's be patient. Look, you see this rejection wick? We have a rejection wick being formed here, and there's still a gap here exactly at the 50%. So I would even dare to say, like, this would be a nice scalp. And you see, we're not aiming on miracles here. This would be a 20 pip move. That's easy, a few thousands or a few hundreds depending on how you enter. Let's look into that. But if we get a break below this here, then we have a bearish market structure shift. But then we still want to see, this would be the setup I would be taking, and only aim for this. Then I would put my threshold on here. This is how I trade. This would be a possible setup. I would buy below and then work with a very tight stop, very good capital management. Always respect your capital, and this could be a potential short position to here. And what we don't want to see is these highs being taken. Well, let's see, maybe a little too we're not trading yet. We're watching what the market is presenting. And you see, I'm not trying to convince you to do the impossible. This is a 19 pip move with a 8 pip stop, 8-9 pip stop. But we would be out already. I'm not even saying we should trade right now. I'm saying we wait, we have patience. And if you suddenly see me in getting into a position, I have to put stop losses. Then yeah, then you see a little bit of chaos. Let's see what's happening here. This fair value gap is gone, but we leave it there as an extra confluence. Look what the market is doing. We already, some people would say on the lower time frame, you see we have a market structure shift here, and now we are breaking above this structure again. So it's very unclear where the market wants to go, but we have a break here below. So we could probably or possibly see some downside. Then we want to see this type of correction and more upside. That would be a position that I'm willing to take, but for now I'm patiently waiting. This area here, there's already too much people in short positions in a bullish move. Most of the times the first position isn't, or the first step that you get isn't the right one, so it could have been that this was a good entry, but you know, the first rule in trading is build good habits, work on your psychology, learn to read the market. And if it doesn't give you what you are looking for, like you're not 100% convinced, then learn to sit on your hands, you know, like this, and don't push any buttons. I'm gonna put the heater on, and give me 2 seconds, I'll be back immediately. Oops, sorry. Bad habits. Maybe good for me to quit smoking or vaping in this case, streaming all day, and health is very important. So you see what I mean? Look what the market is doing. We have a 1 minute consolidation between two fair value gaps. And I love trading this type of patterns. Look, something like this. That would be nice. And I have on my other chart, I'm still intrigued by the level 125, and we are so close to the 125 that I really believe that we could go after this liquidity here, take out these relative equal lows, mitigate the fair value gap here, and then we possibly have a trade in line with the trend. That would be my favorite setup. This one would be a nice scalp, but it's high risk because the market is trending upwards and we already had one downward move. So, and you see it's starting to push up again. There's not a lot of confluence to go short. Even that I believe we could see this fair value gap be taken. We're not putting our capital at risk for 10, 13 pips with a possible 13 pips loss. That's an RR 1-1. It's not my thing. I'm not taking that trade. But you see, entering here above that fair value gap, going after this liquidity with a tight stop, would given us a 2.2, and we could have cashed in here on 15 pips. Those are nice paydays. 15 pips, I'm telling you, 10-15 pips is all we need. If we can get this move, that would be even greater. And you see we have the 50% fib line here. Definitely got my interest to buy in discount, and we start to see one of my favorite patterns. It's an ABC, A, B, C. That's something that I like seeing. Let's take this fair value gap away. This one here is also almost taken. If we have a close above, then we're bullish again. But like I said, I'm more interested in seeing what happens here. And because of the 4-hour time frame, I'm really feel attracted to the idea of getting to the, here you see it in green, the 125 level. So what do we see? We have accumulation, what is already in a continuation. So seeing the market continue. Then we have New York open. New York could be the possible reversal to the accumulation, or this is continuation, small accumulation, more continuation. Then see manipulation and distribution to the downside. We'll have to wait. We have to wait. Trading is 90% waiting, 90% psychology, 10% technical analysis, and trade management and execution. So I'm good. So let's just watch what's happening. Once you realize they ain't telling you the truth, the whole truth, and nothing but the truth, you'll start to see your business and your mindset in a completely different way. Believe me, I've been there. Listen. Once you realize they ain't telling you the truth, the whole truth, and nothing but the truth, you'll start to see your business and your mindset in a completely different way. Believe me, I've been there. Listen. Once you realize they ain't telling you the truth, the whole truth, and nothing but the truth, you'll start to see your business and your mindset in a completely different way. Believe me, I've been there. Listen. Ah, wonderful. And people rushing to get into trades. Look, the whole setup and plan here is if we can get in this fair value gap, we switch to the 1 minute. And I'm gonna do it like this. This is where I would buy one position. This is probably where I would buy a second position. This is where I would buy a third. And this is where I would buy a fourth position. I like working with 4 positions because you have a good one, a real good one that is already showing you that the market is going in your direction, and another one just to add and quickly get some profit. This position is the first that you close then with 10 pips. So that's your first 100 or 1000 of the day. This one, because it has the safest spot, is the position that we trail. So here we put a TP on our target, but once the position is going here in profit and we're buying more, then we're aiming for the next level. That means that the stop of this position would come below this, so this position will be in profit, this position is in break even, and with some luck we have a retrace here and you can buy a fourth one. Don't have to be done like that, but if we can get a fourth confirmation here, it means that we already have a new higher high then. So the market does this, goes back up, goes back down, shoots up, gives us a clear market structure shift again, comes down after the fair value gap or the breaker here, shoots back up, then we could see if we get another position here somewhere, that if we can get this position here and we already have these two in profit, then we can have a whole big position where we already here in profit of the first trade that we taken. This is in profit, this one is in break even, So the stop of this position comes below the break-even point of this one, so these two would annul each other in worst case scenario. So we lose the 3 positions, but we have the profit of this one, so we're good, we're happy, we're grateful, we're making profits. If this position respects our stop and it shoots up, then we have 3 more positions that are paying us very well. So the risk is of course higher, but you have to learn to calculate what you can support, how you want to operate, how you execute your trades. I won't tell anybody where to buy, how to buy, but I wanted to share that so you have an idea. And my stops, I move them as quick as possible to profit. If I get tapped out, bad luck, but I'm gonna maintain my capital or take small losses. That's what I was saying earlier, the fear of being wrong, the fear of losing. I'm not afraid to lose, and I'm definitely not afraid to admit that I was wrong. So if we're wrong, then we want to cut our losers short. Even if it reverses and goes in our direction, I don't care. Being profitable works best for me like that. So look, we're getting that A, B. Oh, that would be a nice move now. Let's see, on the 4, we have the 450, a 20, 24, 450, 24, 450, 24, 450 is a critical point on the 4 hours, and the 24, 550 is a critical point for 24, 574, 24, 574, 24, 574. This is definitely a point where we want to buy. Let me prepare some stops here. Where are we gonna put the stop? That's a $13,000 stop. That's a little crazy. Okay, we have the stop on that's just a safe spot. If we're wrong, we'll be out way sooner than that. I'm gonna see. I'll definitely buy one position, maybe two. Like I said, Monday morning, it's 11, we're inside the kill zone from 10:30. So let's see what happens. Look, the reaction on top of the fair value gap here, but this is actually a small gap here. This is the real gap that we are looking into. Can't take this away, it's gone. And I have a 35 pip stop loss, but open manually, close manually. That's just my modus operandi. That's how I operate. That's how I execute my trades. Now we want to see, before we buy, we want to see all liquidity mitigated, that price can fly through, and that there is little or no resistance. In the position. The only thing that I don't like about this setup is that we have the fair value gap at the golden box here, and let's see how the 5 minute shows its intention. But you see, we're forming a bearish fair value gap. There is a bearish fair value gap, and yeah, intraday play safe, guys. You see, price action on the 5 minute is really starting to show some bearishness. So I'm gonna wait to see the second reaction. I'm not buying at the first. Like I said, I told you I would buy here and buy more later. I'll probably, in this case, because you see the order flow, creation of fair value gaps, PD arrays being respected. Look, forms fair value gaps, taps in, starting to see lower lows. Look. That's a possibility too, so we have to take that in account. So if I'm gonna buy, then I need to see confirmation here in the form of a new bullish market structure shift, or I'm gonna stay out of the market. Let's erase this. Let's check the 3 minutes. Gonna put this on the 5. And let me set some 125 24 596. We have head and shoulders pattern 2 here. That could say that we are going down. You see this? This is a head and shoulders. This would be a possible bet for price too. We're just careful. Calculated and careful. No crazy risks here. If you want to see these guys do crazy stuff and get in the most weird positions, then this channel ain't gonna be for you. Look now. See, we have the 3-minute fair value gap here. We have liquidity left here in this gap. You see that 5-minute. There's enough signals. Let's see what happens. What I like is the 1-hour chart. Let me show you quickly. This formation, I like it a lot because you see the point of this wick. Price should take out most of it and then reverse again. But like trading, I'm telling you, nothing is sure. It's all speculation. Let's check the 15. 15 is giving higher highs, higher lows, higher highs. We are reacting now in a 15-minute order block, fair value gap, sorry. And I raise this. First reaction. So let's see, 11:15 possible buy setup A plus confluences. Reasons why not to take the trade. Monday morning. Second reason why not writing that down. Why not? Because it's Monday morning. I think that's a good reason. Another good reason is higher time frame is bearish. Short-term trend, lower time frame is bullish, so that's a good reason to see if we can get a piece of the action. And there's more liquidity created to go even higher. And we didn't take out Friday high or Friday low, and we're close to the 125, and you already see the reaction. But look, it tapped in here in that fair value gap, but the first one, I don't trust that. And now all this liquidity is gone, so we're gonna take it away. Everything here is gone. So the next target to go short would be here now. Let's see what happens on the 1 minute. How are we going after this fair value gap? I have my stop. My stop is somewhere here below 24 322. That's where I have my stop, but I would exit the market manually if I decide to take this trade. And based on the candles that I'm seeing, I would wait to 124.591. That would be a buy for me, yeah. I'll probably take a buy here. Let's see how many pips this is. This is a 10 pip, $1,000 stop on 10 lots. So to make how much? 28. We get in multiple positions. We get into a new consolidation zone. I'll be back in a second. Have to quickly take a leak. We have the 15-minute showing us that the order block is taken. I like what the hour is showing us. So let's be patient. We got the 5 minutes open. But like I said, I know where I want to buy. And we'll see the 1 minute reaction. That's gonna tell us everything we need to know. And you see the manipulation again. It's saying like, yes, 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 we're going up, we're going up. And then it's, no, we're going down. No, we're going up. No, we're going down. That's why trading on the 1 minute can be nerve-wracking. But it's the best time frame to get in a position, then manage your stop, and then we watch on the 5 or 15 minutes what's happening, so we don't get tricked too easy on or manipulated too easy on closing positions out of fears. There's less rumor, so that's better for the psychology. You see, oh no, and people start buying already. We didn't take the 50% FIP, so we cannot even technically, out of a smart money standpoint of view, we cannot buy here because price didn't go below the 50% FIP. It came close, but it didn't go below. We buy in discount. And not in premium. So again, patience. And you see here, this, we had the higher high, higher, a lower high, lower low, lower high, lower low, lower high, higher low. We want to first see this, a fake move, a fake market structure shift or change of character, a liquidity grab. Let's see what the market presents. Maybe take out these equal highs, then drop even further, create more liquidity here. And you clearly see there is a nice push-up happening already. Taking all the liquidity out of this sweet spot. And you see wick, wick, wick. Let's see how this candle closes. on 11:30. Oh, beautiful. Oh, my back is a little. Like, this is a possibility too. So we have to be careful, really careful. The beauty is, if we would get into this buy here on this level, around in between here, once price takes off, we have a break-even trade that if it goes after the 125, we get a nice amount of pips. So we definitely want two positions here. Want to take the a quick win, and one runner. But let's see, let's see. Time will tell. One thing is sure in the market, price always goes to the right. Up and down, it's always sorry. Up and down is always another story, so quickly checking. Like I said, the first step, I never trust that. And yeah, I miss a lot of possible trades and possible pips, but I strongly believe in the difference between possibilities and probabilities, because a probability is something that you deem probable, and something that you deem possible, there's more emotion connected. And in trading, you want to have at the least amount of emotions connected to the trade. So let's keep on watching. It's going up. Nice manipulation technique. And then maybe you could say then, like, why aren't we looking for a possible short here? Because the 225 is a level that I really think price would trade towards to. And you see we had a tap here in the 15-minute gap, and there's already bullish reactions So can be a build-up of liquidity, of course, because it would mean there comes a trend line where retail traders are gonna trade from, and that creates liquidity to later push towards the 125, the 124 500 is here. You see what I mean? Why I'm interested in that type of, or in that price level range. 125 500. This, the 73, is definitely a point of interest too. I'm gonna erase this. And this is a trade I'm not willing to take, because we don't know what price intends to do there. For the same amount, it gives us this. We never know, so sniper entry is only good positioning, good trade management, good executions, good capital management, all key factors. This would be the ideal setup, because the 25 level would be the 500, the 24 500 level would be taken. By 3 pips, 30 ticks. Let's see what happens, how it plays out. This could be temporarily a good position. See, this type of move. So a lot of possibilities, a lot of question marks here. 50% didn't got taken. Respecting this 3-minute fair value gap. Look, it's respecting this perfectly. For now, the PD array is being respected. And let's see if we do this. I'm bullish. There to buy here. Buy one more here is a possibility to replay the game. Have to change this again. That we play the game like this. That's a good possibility too. Buy here. Buy here. making plans and seeing them play out. Let's just wait and see. We already had the wick play out. So and New York midnight is definitely something we want to take in consideration to trade back. They're definitely bearish. Just thinking out loud. Taking some distance. Oh, didn't have a lot of sleep. Kept reading till 2 a.m. Then couldn't find the right side. Suddenly it was 4 a.m. and I got up at 7 a.m. 15 past 7 somewhere. So really was looking forward to getting into this first live stream, seeing how it all works. And I like it, live streaming. Would be only fun if there's people in the live streams, but that definitely I believe it will come in time. I only started building this YouTube account like 2 weeks ago, and my TikTok account to give people some counseling and advice. I started that like a month ago, so it's all pretty new and recent. Still organizing, so it's gonna be more interactive in the future. Oh, Jesus. This is the 5 minutes. You see, this gap got tapped and respected, and it's disrespecting the bearish PD arrays. We want to see the 5-minute close on a 3-minute gap. It's gonna tell us a lot. Like, this is what's happening now. But, and you see this is the golden zone again here, so we might color, whoops, that wasn't what I meant. I wanted to color the fair value gap orange, not the whole fib. So this one is gone. We had the close above. Now we're looking to the reaction here. Selling above the 125 would be perfect. This one we can put it out of sight for a second. This could be a possible position too, but I'm not taking that. Although it doesn't look that bad. Because we would need this type of liquidity to push higher. So you see enough possibilities to burn your fingers and blow your account. Oh, no stress. Don't have to take a position. It's always great if you have one, and it's even better if you get paid. Tropical fruit flavor. In combination with coffee, it's disgusting. You see, there's so little volatility in the market. Let's check this. 124.788. As the 788. We already went there. Yes. 124.788 was definitely not a bad place to take a short, but you see on the lower time frames or on the 3 minutes, checking the 3 minutes, the 8:30 is even better, and we could see a wick into the 8:40. You see, we're creating equal highs, relative equal highs here now. So that can push us easily through this fair value gap. And yeah, you see, this wasn't a bad sell, but you always have to keep in mind, is your stop loss worth the risk? Because you would have a 13 pip stop for a potential of 21. That's a 1 to 4 risk reward, 1 to 1.4, sorry. I don't like that kind. If we see it like this, then we have a 6 and 9 to 24. That's a 2.13. That's more reasonable. Yeah, I'll probably watch into this position here, but my main concern stays the 125 point. Take this away. We can leave that on the chart. And then we could even risk for the 1, 2, 3 risk reward, but with a 1, 2, 2, my Monday would be awesome already. So, but I think we're gonna leave the equal highs here, because the market likes to leave these things. You know, retail see this as resistance now, so they're gonna put more limits here. There's more stop losses above to push later to the upside. For me, the best trade is gonna be this one, the long position, and probably, you see, we have the New York midnight open, always attracts, and let's see, 521. You see exactly what I mean. You have Friday's high and New York midnight open here below this fair value gap, and we wanna that would be the best position. And this was a good one too, but the top fell outside of our kill zone, so just respecting my own set of rules. Not gonna blame myself for sticking to my plan. It's A plus 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 or nothing here. No exceptions, stick to the plan. And now that we have the confirmation of these equal highs, I don't trust this fair value gap and the 50%. Maybe for like I drawn here for a small retrace, but that's not worth the investment. And you see we're still forming bearish PD arrays, or in this case a fair value gap, and no bullish fair value gap, so definitely more downside to come. So this could be an ICT setup. Stop above the high, but this becomes a triple high then, a triple equal high, so your stop should be there to play safe. Entry maybe here on top of the fair value gap, and aim for an RR 1 to 2. But like I'm saying all morning, the 125 is a level that we don't know how or when price wants to move there. So, and now with these equal highs just below a fair value gap, my confidence in this fair value gap is gone. And our kill zone is almost closing, so I don't think I'm gonna trade this morning. This would be what the market expects. This could be what really happens. And then we have a nice double top with this. And that would push even easier to the upside, so yeah, this could still be a valid scalp. Like this. But you see, the liquidity levels are way too just not my setup. So I'll be waiting and relaxing instead of pushing buttons that I don't agree with. That's the reason why I work from my sofa. It's more comfortable. If I really wanted a 9 to 5 and a chair and an office desk, then I would have one. But for now, this is comfy. I like it. And I have my precious dog with me here. So she's giving me good advice. She's saying, buy now, buy now, buy now. She wants more cookies, of course. That's why she wants me to buy. But don't think that's a valid confirmation. Letting a dog or a chicken or a cat trade. Like sometimes you see that in on TikTok, people having a chicken deciding how to trade, and it's just funny content, but it's not realistic. Although technically trading is a one in two, can go up or go down. So if the chicken has a winning streak, then yeah, or it's might just be a lucky chicken. Look, creating bearish gaps, entering bullish gaps. Like I said, I didn't have faith in the bullish move up in the first move. Maybe we should take the scalp. Maybe not. You're all so serious. Look how we're falling through. Basis of a new order block on the 2 minute. Like I said, I'm not taking positions here. Look how we drop. Was a nice ICT unicorn setup for the morning, but it just doesn't taps all by boxes that make me push the buttons anymore. Like, why would I take a trade that I don't believe in? Because it's all new and exciting. No, it's not new. It's not exciting. Control your emotions. And especially relax while trading. That's exactly the reason why I didn't want to take the long. Although we had a nice rejection week in the first candle, if it respects the fair value gap and we see a push up, look, Look, those wicks. See a push up. No, we're not buying. We're reading the market in real time. It done exactly what I said it would do. You can go back and watch the video. This is what I said the market probably was gonna do. And look what a nice reaction. Look, if we would have bought here like we initially said, remember the purple line? You can go back. You'll see that we had this drawn on the screen. Look what a beautiful rejection. The thing is, it respects the bullish and the bearish PD arrays. So as long as I'm not convinced, I'll rather stay out. Let's clean the chart a bit. But this would definitely be an okay buy, because we would have had a nice 10 pip move. And that's what I'm saying you in TikTok also. If we can get consistently 10 to 15 pips out of the market. Look, if we entered here, we had our stop in break even now, and whatever the market does, it's good. Or we take the 12-13 pips profit and we call it a day. But like I said, it's still early on the week, so we have time to make money. We don't have to do it right here, right now. And the main purpose of this first live is I want to show myself that I really can and do read the market in real time, that I know what I'm doing, I know what I'm saying, and I'm calling these moves like very accurate. But why didn't you take the trade? Because I don't care anymore. It used to be all obsessive compulsive behavior, like, oh, a possible position, a possible position. Now I only look to what could give me the best results. And I said this morning, if it taps here, we can buy. So we would have had the first buy, we would have had the second buy, we could have bought more here and pushed in more here now. That's what I'm telling people. Look, so you see the first step, but I wanted to see below the 50% here, didn't come true, so reason that we didn't buy this one. Let me quickly get into this one. This one was actually a good buy. And now we wait, because if the market gives us a market structure shift here, a close here, we could enter the fair value gap and aim. Look, but it's gonna push through, it's gonna start spooling. We're gonna see some pretty crazy price action, you know. Equal highs here are taken. We have this piece here is inverse now, so could be a potential buy opportunity. Bearish fair value gap in the golden box taken. This could be another possible buy, and then only buy in the best positions ever, or just don't. It's not gonna come back now, so there's no reason to come back. And look how beautiful the lines that I draw on the screen get respected. See, it's really not a coincidence. Taps on the line. Look how many taps we had. 1, 2. We take the bottom line and we reverse. So it would have been a nice move. Look, got in here, made 31, 32 pips. Would have been a nice Monday morning. But there will be way more setups like this week, so doesn't concern me at all. Like I said, my main concern is I want to see price stake out the 125. This one, I can consider that now as an inverse gap too. Like, look, I said it would start spooling. It's typical for the timing. And we had a good reason not to buy, because we got the fair value gap in the golden zone here. Was a good position, but we didn't take it, so let's forget about that position now. And you see, let's make this bigger. You see how close? 24,995 tapped. Let's follow the charts. Is it an early drop? Then it's to rise. Then my initial point of buying would be here on top. This would be my buy. And then the stop, I would probably try to buy there somewhere. But look, why? Because this fair value gap, this inverse, I don't trust it. If you check from here to there, look. This would be the golden zone. and we are at the top of the higher time frame. Look, again, erase that. It was a beautiful setup. Can do nothing about it. We didn't take the trade, we didn't take the trade. So be it. Would have made me a doctor's salary in the morning. A monthly doctor's salary in the morning. But people still say trading is gambling while you see me read price like this. I just didn't like the conclusions that I was seeing, you know. If I see this type of move, A, B, we had the C, but I thought we would see this happen. Oh, we didn't go there. No harm done. We didn't lose money either. We didn't react on emotions. And it's going exactly to where I predicted it was gonna go. Look. Let's get on the 15. Look, I told exactly that it was gonna go to the pink line here. You can go back in the beginning this morning when I started streaming about around 8:39. I said this pink line here was gonna be a good point. Now this fair value gap is taken. Let's see on the 30 minutes first. Look what a bullish push up. That's the square that says not financial advice, I think. Look, the pink line, all these lines, I know what they are, so that's all that matters. Now we are looking in an all other area. This is the last swing high and this is the last swing low. Now we are in this golden box here. Let me make the background a little, yes, like that, and 50% FIP on the higher time frame is here, and this would be our golden bullish box. So now we take this away and let's see. You see, this would be an ideal buy beautiful. We'll change the color immediately. The blue. No background. Look, what a bullish action. I don't like to say it, but I told you so. I told myself so. So I've seen this happen so many times. Let's erase that. It's just confusing now. The pink line can go. It was only there to confirm. So we have another pink line. We have two there. Beautiful. Now we have to see what happens with this fair value gap. And you see this push up. Let's see on the 4-hour time frame. I'm definitely waiting or expecting some bullishness. So let's see what we can do. This for me is gonna be the next breaker that I'm looking for. Change the color into purple. This would be a great buying opportunity again. The thing is, this is the 5-minute time frame, so we want to take a lower swing high low position and start following where the 50% is and where the lower time frame golden box is. So that depends on the high we're making. This is now discount, this is premium. So buying now is for me against all my rules. I'm gonna go on break in a few minutes, and in the afternoon I start streaming again. So thank you guys for the people that gonna watch this video, or people that watched still didn't figure out to see who's watching when. I will learn all these tricks step by step, especially when the team is gonna jump in, because we are working with several people, but till now they don't believe it's a good project. So I have to come with evidence first before the guys start investing their time and money. But that's how we operate. We work separately in a collective. It's the best way. All business owners, we all know what we're doing.